The big cryptocurrency era is here. Can you believe it? Not just Trump is trading crypto. Many real countries are getting into it too. Is the world going crazy? In March, the U.S. Congress passed the Genius Act draft, which the Senate approved on June 17th and the House on July 17th, signed by the President on the 18th. This act requires every stablecoin to be pegged 1.1 to a real value, confirming stablecoins' legal status in the U.S. financial system. In April, Singapore updated its Payment Services Act to regulate stablecoins. In May, Hong Kong's Legislative Council passed the stablecoin bill backed by China. In June, South Korea introduced a digital assets law. Suddenly, major countries are embracing stablecoins. But before this legislation wave, when we heard USDT, we thought of crime, black markets, gambling, fraud, money laundering, arms smuggling, and drugs. Why do these criminals choose USDT? 10 years ago, convincing them to use USDT was probably not getting easier. Hand them cash from the Bank of Heaven and Earth as loan vouchers. This is a topic worth discussing in modern monetary history. What does the stable currency mean? Is it just another way to exploit people, or is it about currency? The night before currency system reforms. Hi everyone, welcome to Quick Leisure News. I'm Hugo, and today we'll talk about stablecoins. In the 1980s, Pablo Escobar, the Colombian drug lord, earned over $420 million weekly from drug trafficking. His biggest headache was not self-protection, but storing his cash. Since most of his money was in cash, he lost about $2 billion annually due to issues like restructuring and corrosion. Logically, the best way would be to deposit the cash in a bank and convert it into numbers. Now imagine you are a recent graduate at a bank and a big guy walks in with a bag of cash, saying he wants to deposit this bag and that there are 3 more trucks outside. Would you think about calling the police after setting up the account? So, before drug dealers can deposit dirty money in a stable bank, they must launder it first. How do they do that? By tossing it in the washing machine. That's right, kid, you got it. In the 1920s and 30s, Chicago mob boss Al Capone laundered money from illegal liquor sales. Hand them cash from the Bank of Heaven and Earth as loan vouchers. This is a topic worth discussing in modern monetary history. What does the stable currency mean? Is it just another way to exploit people, or is it about currency? The night before currency system reforms. Hi everyone, welcome to Quick Leisure News. I'm Hugo, and today we'll talk about stablecoins. In the 1980s, Pablo Escobar, the Colombian drug lord, earned over $420 million weekly from drug trafficking. His biggest headache was not self-protection, but storing his cash. Since most of his money was in cash, he lost about $2 billion annually due to issues like restructuring and corrosion. Logically, the best way would be to deposit the cash in a bank and convert it into numbers. Now imagine you are a recent graduate at a bank and a big guy walks in with a bag of cash, saying he wants to deposit this bag and that there are 3 more trucks outside. Would you think about calling the police after setting up the account? So, before drug dealers can deposit dirty money in a stable bank, they must launder it first. How do they do that? By tossing it in the washing machine. That's right, kid, you got it. In the 1920s and 30s, Chicago mob boss Al Capone laundered money from illegal liquor sales. What? Numerous laundries opened. If one makes $500 daily, reporting $2,500 can legalize $2,000 of black money, known as money laundering in English. The reason it's called money laundering in English is that legalizing money and keeping it in a bank or investing it is much more reassuring than hiding it underground. But we are in the 21st century, not the worry-free 20th century. We can't live in the past anymore. Now imagine you are a smart chemical engineer who created a blue sugar business that has made you your first million. Now the question arises, how do you bring the money back to your hometown in Mexico to revitalize the local village? First, do some banking research. In the US, if you deposit over $10,000 in cash, you must report the source of the funds. If you break it into $1,000 deposits, that triggers a structured transaction known as smurfing. If you plan to open 100 laundries like Al Capone, you'll be in trouble. Authorities will review you. You were unemployed before, right? Where did the money come from? Go quickly to the shop for mineral water, and in a second, you'll get what you want. But below is a chaotic world full of doubt, deceit, and violence. The black market, war-torn countries, and poor nations all fit into this. You make money selling drugs, but everyone knows it and will charge you fees. So, your dollar might only be worth 50 cents. You need to find a way to move the money up to make it worth $1 again. Make it $1 again. And in the 2010s, a new retail money laundering model formed. In the 2010s, a new retail money laundering model appeared, selling black money to Chinese students or workers. Exchanging currency abroad incurs losses, especially at airports. Exchange currency at the airport if you have extra cash. Drug dealers will reach out to Chinese people to set up a black market. A student exchanging $10,000 in 2013 would need around 62,000 yuan. The dealer says, you give me 50,000 yuan and I'll give you $10,000 cash. The loss for the dealer is only 19%. The loss is much lower than the average 35%. Students profit instead of losing. The operation looks simple, but has some technical aspects. This is how you win wars. Lately, US interest rates are high, and what if? If loans are idle, the interest is 8%. Why not go for it? The good part is, if you pay this interest, borrowing is easy. Loans are approved quickly. They fear you might back out. I once went to the US, and there was, a guy said to me,
I do tourism real estate, and have bought over 100 houses in Vegas and Florida.
I asked, where's all that money coming from?
With direct loans and financial tools, you can cover payments without paying the principal. You can get a property for Airbnb, especially since US middle-class spending has exploded and hotel prices have risen. From the first month, the rent covers both principal and interest, so you start earning right away.
But what if the US stock market bubble bursts? Wouldn't you go broke?
As a Chinese person, I can just go back home and that's all.
That being said, borrowing from international students has issues. First, the volume isn't enough. International students have limited financial capacity. You can't expect them to spend billions on studying abroad. Second, international students are too naive and unprofessional. The FBI doesn't. He directly admitted it, so to further decrease the cost of illegal activities and grow the currency market, black market traders have begun a new currency revolution. First, it's regarding the use of the dark web in 201. Wu Bulixi made an online trading platform without the Silk Road, ensuring black market traders' privacy by using Onion routing, for example, to browse a target site. Your IP address and device MAC are not sent directly to the target site. They are encrypted first, sent to node A, then node B, and finally node C, which delivers it to the target node. This way, each nodes only know the encrypted info from adjacent nodes, making tracing addresses difficult. Transactions use Bitcoin, not traditional dollars, to maintain privacy. Data is passed between two encrypted addresses, keeping personal identities and transaction records hidden. To transfer currency into a stable world, just find a crypto exchange. In 2014, black market traders found a bigger problem. Bitcoin's price swings greatly limited the market for goods. If Bitcoin goes up, sellers are happy, but buyers are not. When Bitcoin goes up, sellers are happy, but buyers are not. If Bitcoin rises, am I not like that guy who traded 10,000 Bitcoins for a pizza and lost big? So buyers hold off on purchases, items. Bitcoin has dropped again, and buyers are relieved, but sellers are unhappy as their earnings have decreased, especially after the People's Bank of China banned Bitcoin use in December 2013. After the news, Bitcoin fell sharply from $700 in January to $320 in December, leaving everyone in the crypto space upset. I attended a conference in Vietnam to learn about cryptocurrencies. The conference felt like a game, and I added a guy on WeChat who leveraged at $700 and bought down to $400. He later asked why it hadn't bottomed out, and now Bitcoin is at $100,000. How has it not reached the bottom yet? This was the final message in our chat. In response to this need for stability, a new cryptocurrency revolution has begun. In 2014, Tizer launched a project called USDT on the Bitcoin network. You can buy one USDT for $1 from Tizer, and with that USDT, you can exchange it back for $1 through Tizer or other intermediaries. To ensure funds for exchange, Tizer invests the dollars in US Treasury bonds and other quickly convertible products, generating returns. This mechanism created stability in the volatile crypto world. A digital currency pegged 1.1 to the US dollar is a big profit for Tether, which made $13 billion last year with only 165 employees, averaging $80 million each. USDT started as a program on the Bitcoin blockchain, but Bitcoin's transaction speed was too slow, allowing only 7 transactions per second with high fees. So Tether upgraded USDT to link it to Ethereum and Tron, improving transaction speeds. Tron is linked to Sun Yutchen, a notable Peking University alumnus and the CEO of a NASDAQ-listed company known as the first Chinese in commercial spaceflight. When I hear his name, I instinctively cover my wallet. Thus, stablecoins have completed the final piece of the puzzle, connecting the upper and lower realms of currency, marking a little discussed chapter in modern illicit currency history. At this point, it is essential to ask, is the stablecoin you've been discussing the same as the stablecoins promoted by governments? How could such a common purchasing item possibly reach such a high status? Now, we need to mention a common topic, the gray rhino in the room, which is the US debt crisis. The current US national debt is essentially the Federal Reserve's responsibility. The government owes over $36 trillion, and this debt is increasing at a rate of about $1 trillion every 3 months. In 2024, the average interest rate on US government bonds will be 3.3%, meaning interest payments will exceed $1 trillion. The military budget is only $895 billion. Recently, the yield on 10-year treasury bonds has been above 4.3%. What does this indicate? Interest rates reflect investors' risk perceptions. For example, the 10-year bond yield in China is just over 1%, while some projects in Guizhou have borrowing costs over 10%. This shows the risk difference. If you check with a nearby bank, you might find that the interest rate for the US government to borrow is higher than yours.
Our currency is like a 350-kilogram gas tank for 2 days on a train.
I see your table. The federal budget is unsustainable. The U.S. debt is losing its top buyers. In 2011, of the $10.1 trillion in U.S. debt, China, Japan, and Canada held 12.9%, 8.7%, and 1% respectively. By November 2024, the stakes of these three countries in the $36 trillion of U.S. debt have reduced to 2.14%, 3.05%, and 1.43% respectively. 95% has dropped to 6%, down about 17 points. In 2020, net foreign sales of U.S. bonds exceeded $60 billion, shifting investments to gold. U.S. bond rates are under pressure. Rates are rising, as seen in May's auction of $12 billion in 20-year bonds by the U.S. Treasury, yielding 5%. The yield was 5.047%, just over 5.035% by 1 basis point. What this indicates is that the initial bond selling rate was insufficient, causing rates to rise before sales could occur. As more bonds are issued, rates remain high, and there may come a time when they cannot be sold at all. The U.S. Treasury and the Federal Reserve can't just wait. They've done a lot to tackle the U.S. bond crisis. For example, on June 3rd, the Treasury bought back $10 billion of bonds that no one wanted to buy. To avoid market exit, I must save myself. It should be time for conflict, as the U.S. is far from Eurasia, a chaotic place. When conflict arises, the instinct is to flee to the safer U.S., but the U.S. is currently stuck. For various reasons, the U.S. is stuck and cannot engage in conflict. Simply put, they cannot defeat their main adversary and are restrained from going elsewhere. They can only let Israel engage in minor conflicts, but Israel only dares to confront Iran. What good does that do? What's the use?
Iran is broke again, and it has to deal with the EU. The finance ministry is at a loss, only to discover a group arguing over US debt, the stablecoin issuers. Earlier, I said that if you take a USDT to TSLA, it will give you back $1. Now, if someone deliberately hoards a lot of USDT and suddenly tries to redeem it for TASLA, how can it ensure payment? It must. Owning a lot of highly liquid US dollar assets means they can be sold quickly when needed, and the most liquid assets are US Treasury bonds. In fact, about 80% of TSLA's assets are US Treasury bonds. National debt and overnight repos total over $1.2 trillion. In May, it surpassed Germany, and by August, it surpassed South Korea, becoming the 18th largest holder of US debt. TSLA ranks 7th in 2024 by purchase volume. Nago stablecoin can enter the market because heaven hates Sodom but needs it. This is observed in the behavior of stablecoin issuers, involving the Dong family and their interests. They see profit potential, which we discussed before, so I won't elaborate. The U.S. Congress will push the Gen I US bill globally. The stablecoin must be pegged to the dollar, and issuers must hold a highly liquid dollar asset for each stablecoin issued. Assets must include cash, short-term bonds, and repos, audited monthly. Stablecoins can't pay interest, and if the issuer goes bankrupt, debts must be settled first. Stablecoin holders must cooperate with anti-money laundering laws and report information. USDC is compliant with the Genius Act due to its advantages. Circle's USDC surged from 6.8 billion to over 30 billion since June 5th, but its asset holdings and disclosures are non-compliant, raising questions about regulatory adjustments. This is noteworthy. One must ask whether the Federal Reserve can purchase U.S. Treasury bonds directly. We have viewed the U.S. as a typical borrower, but it is not. The dollar is a digital currency created by the U.S. Treasury and the Federal Reserve, eliminating the risk of default on U.S. debt, as interest rates can be self-determined, and U.S. debt issuance cannot be postponed because the Federal Reserve has that authority. For real economy operators to secure the lowest dollar interest rates while benefiting from federal infrastructure funding, it's essential to note that those attacked also contribute to military expenses. This is why U.S. Treasury bonds and the dollar are intertwined. If the bonds fail, the dollar fails too. People hold dollars because they can trade them for bonds, allowing them to benefit without any effort. The returns guaranteed by global economic growth illustrate the essence of credit currency. The source of credit cannot be achieved in this environment. Now, about the high interest rates on U.S. debt, can the Federal Reserve buy U.S. debt to lower these rates? Yes, it can be done. However, the Federal Reserve's purchase of U.S. debt will inject new dollars into the banking system, further raising prices in the U.S. In recent years, personal circumstances in the U.S. have been quite divided. The U.S. situation is still quite polarized. If you've worked for many years with a high salary and have assets like a house, stocks, options, and crypto, you're in a great position as everything is increasing. This is why U.S. tourism and real estate are booming. It's due to middle and high-end consumption from this economic wave. If you just graduated with nothing and have student loans, finding a high-paying job may be tough. Then people have died because everything is getting more expensive. Will prices continue to rise? Americans are people too. Some can't sell plasma due to health issues, while others can't find a sugar daddy or mommy. You can't treat America like Japan. The total U.S. debt isn't the issue. The real problem is the disconnect between the dollar's issuance and the real economy. There isn't enough real economy to support the dollar's value, leading to inflation on one side and high interest rates on the other. What can be done? Recycling dollars will lead to recession. The only solution is to increase economic activity within the the dollar system. The wise see that many people around the world don't use dollars or buy US debt. For instance, Nigeria exports oil to the US. After receiving dollars, Nigerian banks issue local currency backed by those dollars. The taxes from currency issuance and loan interest benefit Nigeria's government and banks, but they haven't truly benefited from the US financial system. Can this economic activity be integrated into the dollar system? Stablecoins are the answer. The main users of USDT are no longer just black market participants, but people living at the intersection of global finance.
The broken economy of humanity needs stablecoins for remittances and inflation protection in Turkey.
In Bolivia, more than half of the 34-year-old population uses digital currency, as inflation has drained central bank dollar reserves and black market rates are over 50% higher than official rates. Thus, the populace has turned to USDT for daily expenses, with local supermarkets displaying prices in USDT. Africa, particularly Uganda, is where USDT has spread the fastest and most boldly.
In Nigeria, USDT is commonly accepted for transactions, and many companies pay salaries in stablecoins due to local currency inflation. On TikTok, many black users share videos about the severe devaluation of their currencies, so the first thing to do after getting paid is to convert it to dollars.
In the countryside of Nigeria, bank branches have ATMs, and right after cash is loaded, locals often raid them. The ATM is usually dismantled right after cash is put in, as everyone has a mobile phone to use. Stablecoins solve the problem, so let's look at the Gen IUS case based on the dollar. 5.
We must work with U.S. anti-money laundering efforts to freeze accounts. This means that under the financial law's stablecoin issuance mechanism, for every stablecoin bought by Nigerians, the U.S. Treasury's account will increase by $1 in bond purchases, and the reserves in the U.S. banking system will also rise by $1. Additionally, the basis for all currency taxes and loan interest differentials will increase by $1. Interestingly, stablecoins not only boost U.S. Treasury bond purchases, but also lower their interest rates. Generally, higher interest rates on U.S. Treasury bonds lead to better sales, right? However, the stablecoin issuance mechanism does not provide interest to holders. They essentially pay for the convenience of stablecoins with the interest from U.S. Treasury bonds. Therefore, as U.S. Treasury bond interest rates decrease, more people will exchange for stablecoins. This represents a new era of colonial authorization legislation. I grant you the right to colonize a place, such as Nigeria. The agreement is as follows. If you successfully promote stablecoins into every aspect of Nigerian life, integrating Nigeria's economy into the dollar system, you will become the governor of Nigeria's financial world and receive returns from U.S. Treasury bond interest. If some aim for the dollar stablecoin to reach 10 trillion by 2028, then at a 4% Treasury bond interest rate, there will be $400 billion in profit waiting for you to seize each year.
In summary, let's briefly discuss the impacts of stablecoins. By 2024, stablecoin global payments have hit $27.6 trillion, while global cross-border trade is about $250 trillion. However, stablecoins are still early in development, with most payments being high-frequency trades on-chain, and only about 10% used for actual purchases or remittances. This hesitance is due to banks and internet companies fearing regulatory issues. But with government backing, things change. Imagine if Amazon, Instagram, or PayPal got involved with stablecoins. What a scene. Many small countries would lose financial sovereignty, as dollar-pegged stablecoins would outperform most currencies in pricing and reliability. Previously, people used local currencies due to government control over transactions. Now, with smartphones, anyone can buy stablecoins, which is unstoppable. Once this trend starts, everyone will rush to convert to dollar-pegged stablecoins, causing severe inflation and deflation in those countries' assets. This means inflation for local currencies and deflation for dollars, making local currencies worthless. Selling local assets for US dollars will be very cheap, causing asset loss and leading to the collapse of the tax system. Taxes are collected in local currency, and when that currency becomes worthless, there will be no tax revenue, resulting in no police, military, public hospitals, schools, or even public restrooms. Without solutions, many countries could face extinction. The promotion of stablecoins is just the first step. The next step is the on-chain representation of physical assets, known as RWA. Stablecoin transactions are very convenient, and any stock or security that goes on-chain will attract global buyers, increasing liquidity and valuations. Everyone will want to go on-chain. This has happened before. For example, NFT copyrights sold in the open market can be seen as RWA. However, there was no government support then. The NFT copyrights lacked protection from law enforcement. Theoretically, that monkey avatar is yours, but I could use it as a trademark. What could you do? You had no recourse. Now, the government supports this, so with a stablecoin wallet, you can buy any security worldwide. If funds and assets are really distributed globally, how will this affect China? Didn't Hong Kong also pass a stablecoin law? First, we need to think about the possibility that the US is promoting stablecoins to maintain and expand its influence. Can China push for the renminbi's dominance and compete with the US dollar? Since Chinese bond rates are much lower than US rates, if you let people buy freely, it could lead to a rush, but I think that's unlikely. Possible.
The current US dollar hegemony is supported by China's productive capacity. If China were to act, where would the US dollar hegemony come from? However, China appears very unwilling to engage in this matter for complex reasons, which I won't elaborate on. In short, it is because if you can print money to buy things, the cost will be much lower than producing them yourself, conflicting with domestic manufacturing. Spain's financial hegemony developed, as did England's, France's, and the Netherlands, while England's financial dominance also emerged in Germany and the US. The US financial dominance has expanded into China, Japan, and South Korea. The US has finally found a way to sustain its financial hegemony, which is positive. China is also promoting stablecoins to maintain a relatively independent status in the new dollar system. Currently, for example, the US dollar stablecoin relies on its convenience and low cost, which will inevitably replace the current SWIFT global transfer system. We hope that all transfers will not be subject to US oversight.
We must create a parallel system. In the end, as individuals, we should think about how to deal with the US, which is like the biggest ship, Noah's Ark. It's very wrong to cause tsunamis just to salvage what smaller boats lose. On the shore, we are safer, but we are too far from opportunities. Many things are still unclear, but I think the right direction is to go to sea. In the future, many countries' dollar-priced assets may become cheap. Without first-hand info, it's useless. I heard Argentina has dividends, and I want to join. I am a representative of the chives. Recently, China and the US represent the strongest real economy and the strongest financial virtual economy in the world. After decoupling, it doesn't mean each side will just cover their losses. Instead of just filling gaps, a house swap situation has developed, becoming chaotic. China's real economy is strong, but money isn't flowing out, and many global leaders are here. In China, many may face bankruptcy and unemployment due to fierce competition, while in the US, there's too much money, and the real economy can't keep up, especially at 40 trillion.
The blockchain revolution is advancing, while Americans eat $300 dumplings and stay in $5,000 hotels. Why have many Silicon Valley friends returned to China for checkups and to send their kids back for school? Why is Gu Anlin coming to Haidian for tutoring? Because quality education and healthcare are vital for productivity, a trait of strong nations. If kids are educated in the US and only take painkillers when sick, won't they disconnect? What advantages will they have? The same applies domestically. To avoid competition and develop, one must go abroad. I'm just chatting. Feel free to comment. That's it for this video. Thanks for your support. See you next time.